Good afternoon, everyone. Today we are going to understand about diminishing balance method. So as we have discussed earlier that we have two methods of depreciation. Mostly, actually we have 10 methods. Under that, two are the familiar one. Under that, we have in the previous class, we have discussed about fixed installment method. Now we are going to discuss about diminishing balance method. So please look at the question which I'm sharing now. So this is the third question where it is discussing about the diminishing balance method. A firm purchased on January 1, 2010 certain mill machinery for rupees 40,000. On 1st July 2010, additional machinery costing 20,000 was acquired. Means on 1st January, they are purchasing a machine which is worth of rupees 40,000. And again on 1st July 2010, an additional machinery costing 20,000 was acquired. Means additional machinery also purchasing. So they have two machines in a 1 year. On 1st October 2012, the machinery acquired on 1st January 2010 was sold for rupees 25,000. Means the machinery which was purchased on 1st January for 40,000 has been sold on 1st October 2012 for rupees 25,000. And on the same day, new machinery was purchased for costing rupees 80,000. So on the same day, they have sold a machinery and purchased another machinery. Assuming that 10% of depreciation is charged under diminishing balance method, show machinery account up to 31st March 2013. So from 2010 to December 3rd, 2013, December when they are telling it is a December, it means the accounting year for that problem or that for that machinery is 1st January to 31st December. So our year, the first year will be 1st January 2010 to 31st December 2010. So now let us prepare machinery account from 10 to 13. Draw machinery account. And machinery account, as we know, we have date column, particulars column, and amount column. Same on both the sides. Date, particulars, and amount column. So now the first machine was purchased on 1st January 2010. So whenever a machinery is purchased, I'll write on the machinery account because the entry will be machinery, that is asset account debtor to bank account. Here asset means machinery we are purchasing. So machinery account debtor to bank account. So machinery account debit side, and my date will be 1st January 2010. And my entry will be to bank. And as we have three machines in a one problem, for my clarification, even as a student, you also should write like this, that it will be very clear when you calculate depreciation or when you want to find out whenever an asset is sold, whether which asset is sold. For that all clarification, it's better to write which asset. Is it first machine, second machine, or third machine? So for our understanding, we will write one. It means it's the first machine. And the first machine was purchased for rupees 40,000. First machine was purchased for rupees 40,000. Now, in the same year, another machine is also purchased. That is on 1st July. So, 1st July 2010, there is another machine. So, again, same entry, machinery account debtor to bank account. So, to bank. And as it is a second machine, so I'll write to bank for my understanding number 2. So it is second machine. And the value of that machine is 20,000. So now we have two machines, and in this year only we have to find out depreciation. And as it is mentioned, the year is ending on 31st December. So it will be 31st December 2010. By depreciation. Whenever depreciation, our entry will be depreciation account at R2 machinery account. So on credit side, I will write by depreciation, and below that, for my understanding, I'll write clearly so that it will be very easy for me. So for first machine, the value of first machine is 40,000, and the rate of depreciation is 10% given to us in the question. And it is purchased on 1st January, it means for whole year. So first depreciation for the first asset will be 40,000 into 10%, it comes to 4,000. Now, similarly, we have to provide for the second machine also. So second machine, it is purchased for 20,000 into 10%, and it was purchased on when the second machine was, you can see here, the second machine was purchased on 1st July. So from July only we will use it. Okay, July, August, September, October, November, and December. So it is for 6 months. So I'll write here into 6 by 12. And the amount comes to 20,000 into 10%, 2,000. Half of that will be 1,000. It will be 1,000. So altogether, amount will be here in the amount column 5,000, 4,000 plus 5,000. Now I have to close the account of that 2010 year. So 31st December 2010, I will write here by balance. By balance carried down. And first let us total this. Here total will be 40,000 plus 20,000 comes to 60,000. And here difference 60,000 minus 5,000 will be 55,000. So my balance is 55,000. And the account total is 60,000 for the 2010. And this balance, as this year is ending, so I just close that account by drawing two lines under that. So under 60,000 on both the sides, we are closing the account by drawing two lines. Now, and the next account next year will be 1st January 2011. And in this year, we are carrying the balance which is there in the 2010. So in 2010, the balance was, I'll write like this, to balance brought down. And the balance is already, if you can look at here, it is 55,000. So I'm carrying here 55,000. So in 2011, there is no transaction, no purchase, no sale. It means we will have only depreciation in this year. So my year ending is 31st December 2011. So again, depreciation entry is depreciation account at R2 machinery account. So I'll write here by depreciation. Machine 1, yes. So which method we are following? We are following diminishing balance method. We are following diminishing balance method. And now if you look at here, what is the value of first machine? You can just look at here. The value when we purchased the machine, it was 40,000. And in that year, we have provided depreciation of 4,000. So what is the value of first machine left over? It is 36,000. 36,000 into 10%. On the balance, we will be calculating the depreciation. So balance of first machine is 36,000. 36,000 into 10%, it comes to 3,600. Now, second machine is also there now. So for the second machine, the depreciation will be, if you look at here, first in the first year, the second machine value was 20,000 and its depreciation value is 1,000. So the balance is 19,000. 19,000 into 10%. So here the machinery value is 20,000. Here it will be 1900. 19,000 in 10%, it comes to 1900. So 3,600 plus 1900 comes to how much? 5,500. 5,500. 3,600 plus 1900 comes to 5,500. So now again in this year we don't have anything. So I'm closing the account 31st December 2011, and the balance I'll be writing like this: by balance carried down, and the balance is 55,000 minus 5,500 comes to how much? 55,000 minus 5,500 comes to 49,500. We get 49,500. So again our total will be on both the sides 55,000 and 55,000. So again, as the year is ending, I'm just closing it, the account, by drawing double lines under that. Now, our next year is 2012 and the year starts on 1st January 2012. 1st January 2012. And now I write over here to balance drawdown, and the amount is 49,500. Before calculating the depreciation, why? Because in this year we are selling the first machine. You can see here in the question it is mentioned on 1st October 2012. So if there was no purchase, no sale, directly we would have gone similarly what we did in 2011, like directly depreciation. But now we cannot go because depreciation we will calculate in the year ending. But if you look at the question, in the October, means before the year ending, in October month, we are selling the machine which was purchased on 1st January. In 1st January, which machine we purchased? We purchased first machine. So first machine value is 40,000. This machine now we are selling for 25,000. So first we will sell the machine. So, and we will find out whether we got profit or loss. And then we will go for the earlier machine depreciation and new machine depreciation. So first I will write, whenever we sell the machine, what is our entry? Bank account debtor to machinery account. So machinery account credit side I am writing because this is sold on 1st October. So 1st October 2012, I am selling the machine. So I write as entry is bank account debtor to machinery account. So I am writing on the credit side by bank. In the brackets I write by bank, in the brackets I write sale. Sale of which machine? For my understanding, I am writing first machine. And I'm selling this machine for 25,000. I'm selling it for 25,000. Next. So when I'm selling this machine on 1st October, it means from 1st January 2012 to 1st October 2012, I used that machine. Yes. So for till the date I used that machine, I have to provide depreciation. So I will provide depreciation for that machine only. So 1st October 2012, by depreciation. And now which depreciation? Only for the first machine I am providing. Okay. So what is the balance of first machine on this day? If you look at here, already the first machine value was 36,000 minus 3,600 comes to how much? 33,400. So the first machine value presently it is 33,400. How I got this 33,400? Because in the first year 40,000 minus first year depreciation 4,000, it comes to 36,000, minus in second year depreciation is 3,600. So if you deduct it, you'll get 33,400, and depreciation will be into 10% into how many months did I use that first machine in this 2012 year? That is from January to October. October means when I am selling this machine on first day itself. It means I used only 9 months, because on first day I cannot use. I am selling it. Means I used till 30th September 2012. So January to September, 9 months. Into 9 divided by 12. It comes to how much? 33,400 into 10%, 3,400, 3,340 into 9 by 12. Yes, it comes to, if I'm not wrong, 2,430. 33,400 into 10% into 9 by 12. It comes to 36,000 minus 3,600 comes to 33,400 only. No, 32,400. Sorry. It is 32,400 into 10% into 9 by 12. Yes, 32,400 into 10% into 9 by 12. It comes to 2,430. Now I wanted to find out whether I got profit or loss by selling that machine. So what I'll do, I'll just do a working notes which is related to this machine. Under that, calculation of profit or loss, because I don't know whether I got profit or loss. Profit or loss on sale of machine, that is first machine. So below that I'll write machine purchased on 1/1/2010, because the first machine only we are selling. We purchased it for 40,000, and in the first year we have provided depreciation, so less depreciation. As it is a diminishing balance method, we will calculate it on the balance only. So in the first year we got a depreciation of 4,000. So when you deduct it, you will get 36,000, and this 36,000 is the value of depreciation on the balance. We get it value of machine on 31st December 2010 is equal to, we'll get 36,000. So again in the second year we are providing depreciation, and depreciation amount will be, as we have already calculated, it is 3,600. So we get an amount of, and the difference was 33,400. So again we write here value of machinery on 31st December 2011. It is 32,400. So again on this we have calculated the depreciation because we are selling the machine and we are selling this machine on depreciation. Because here we are selling in the, and depreciation is still only 1st October. It means we used till 30th September only. The assumption we are selling on 1st means used till 30th September. 1st October 2012 is equal to 2,430. So 32,400 minus 2,430 comes to 32,400 minus 2,430. This is the value of machine on 1st October 2012. So here the value will be 0, 7, yes, it will be 22,970. 22,000, no, it's wrong. Just check it. 32,400 minus 2,430 comes to how much? Yes, 29,970. It is 29,970 is the value of machine on the day where they are selling. Okay. And now less sale value. Sale value of machine is 25,000. Sale value of machine is 25,000. So if you look at here, the actually value of our machine is 29,970 and the sale value is 25,000. It means we got a loss and the loss value is 4,970. 29,970 minus 25,000 and the balance is, that is called loss on sale of machine. That is 4,970. So whenever we get a loss, what will be our entry? Our entry will be profit and loss account debtor to machinery account. So as it is a first machine and so on, we are selling on 1st October. So I will be writing as the entry is profit and loss account debtor to machinery account. So 2012 in machinery account credit side, I will write by profit and loss account. In the brackets, I'll write loss. Sorry. In the brackets, I write loss and the amount is 4,970. Now we ended the matter of first machine. There is no existence of machine 1. What we are doing on this day? On this day, we are purchasing another machine. We are purchasing on the same day another machine. So this machine will be called as machine 3. This machine will be called as machine 3. So our entry will be machinery account debtor to bank account. So I'll be writing here to bank, and as it is a third machine, I'll write third machine, and the value of third machine is 38,000. 38,000. So now I will provide depreciation on how many machines? I will provide depreciation on 2 machines, that is second machine and third machine. When will I provide depreciation? At the year ending, and the year ending is 31st December 2012. And my entry will be depreciation account debtor to machinery account. So by depreciation, and I have second machine and third machine. So I'll write here second machine, and value of second machine will be, see, you can just check it here, 20,000 in the first year minus 1,000, it is 19,000 minus 1,900. 19,000 minus 1,900 comes to how much? 19,000 minus 1,900. It will be 17,100. Yes, 17,100. So second machine value is 17,100 into 10%. So it will be 1,710. Now we have new machine now. Yes, so that is third machine, and third machine value is 38,000, and depreciation is 10%. And when did we purchase this machine? We purchased this machine on October, 1st October. So how many months we used? We used only 3 months, October, November and December. So into 3 divided by 12 comes to 38,000, 10%, 3,800 into 3 by 12 comes to 950. Okay. So here 950. We got the depreciation of these two figures, yes, and these two together it will be 1710 plus 950, it will be 2,660. And this is how we end the third year. And third year total will be 49,500 plus 38,000 comes to 87,500. 87,500 is the total of debit side, and even credit also. No, here we will have balance. Yes, so total here is 87,500 on the debit side, and please total up the credit side, and total of credit side will be 25,000 plus 2,430 plus 4,970, 33,000. That is 32,400 plus 2,660 comes to, and the difference of it will be, yes, 52,440. So here our closing balance will be 31 December 2012 by balance carried down 52,440. So total on both the sides is 87,500 and 87,500. And they are asking us to find out till 2013. So till 2013 means again we are not purchasing any more assets. So just we'll write here first. So this is how we will calculate the diminishing balance method. I hope you all have understood.